Hi everyone, good afternoon and welcome to F&O Bazaar, our special expiry day live session. We have been witnessing a very volatile market from last few days basis on the global news flow. And today we opened with a gap up of approximately 250 points and then we came down, but still about 24,000. That's a crucial level, I must say. So in today's live session, let's understand the possibilities around Nifty for the expiry. My name is Sonali, and with me we have Nandisha and Siddharth Deshpande from Prime Research Team, and we are going to take the session forward. So today we are going to discuss the derivative positioning for, especially for the expiry day, option chain structure, key technical levels, volatility trends, and potential trading setups for both intraday and positional perspectives. So. Let's get into the discussion. So, Nandish, my first question is to you. How the derivative data was placed at the beginning of the day, and also how derivative indicators have changed till now, because after the gap up we have came down, so something must have changed technically. So we would like to know that.
Yes, Sonali. First of all, is my screen visible?
Yes.
Yeah. So let's start. First of all, let's see what was the yesterday's data. This is our daily derivative report. From that, you can see here the open interest. This is a Nifty 50 snapshot of yesterday. Nifty open interest moved up by 11% yesterday. And if you were to see the open interest change in last few days, every day Nifty is witnessing rise in open interest. So I think last 5 days Nifty has the open interest in Nifty future has risen by more than 35%. So and in that during that period Nifty has fallen sharply. So actually we witnessed short build up in last 5 days. Coming to yesterday also the open interest in Nifty future went up to 11% with 1.73% rise, 1.73% fall in Nifty. That suggests short build up. However, we need to understand that yesterday Nifty moved up by 300 point from the low, and actually that low made in the beginning of the session only, and then Nifty gradually recovered. So that was good sign. Although there was short build up from the morning build up, we witnessed some cut. But yes, at the end of the day, we witnessed a 11% rise in open interest. However, Nifty open interest put call ratio uh, that moved up actually 0.8 moved up to 0.99 from 0.84. So that suggests that at lower level, at level of 20,800, 24,000, we witnessed some put writing, and that's why this put call ratio moved up. So that was good sign. Coming to FI's data, FI's continue to remain seller. Yesterday, FI's created fresh short worth rupees 3073 crore. And if you were to see the breakup out of 3073, almost 3000 crore short was there in Nifty, with their open interest moving up by 20,000 contracts. So FIs were aggressively short in cash also. The net sold worth rupees 6,000 crores. So FIs remained seller. Even if I were to see the data of the entire series in this series, March series till now, FIs net short 14,000 crore in index future. So they remained net seller. Their long to short ratio in index future fell to 0.14. This is the lowest in the series. We began the series at 0.27. Now it came down to 0.14. So FIs remained aggressive seller in the index future. They might be hedging their aggressive cash positions which they are holding as a portfolio. They must be hedging their position through index future, but yes, they remain net seller in the index future. Now coming to today's data, today after a long time we have witnessed some long build-up. As you can see here, we have seen long build-up. If we were to combine the open rates of March, April, May future, so we have witnessed long build-up. Even Nifty open rates put call ratio. In the morning, it was 0.99, the same level as of yesterday, but now it is moved up to 1.05. So this rise in put call mainly on the back of put writing at various levels, 24,100, 200. Siddharth will give you exact details, but yes, this rise in put call ratio was on back of put writing. So today's data suggests that this bounce back may continue. We might seen some short covering by FIs also. That data we will know only today night. But yes, as they were aggressively short, we might see short covering by their side also. So overall, as of now, data remains bullish, as we have seen long build up in the Nifty futures. We have seen rise in put call ratio on the back of put writing, and also Nifty is holding to the gains which made in the early morning. So as of now, data turned strong. Sonali.
Okay, so that's a kind of a breather for now. So, Nandish, before we go to the intraday chart, when I asked to Siddharth, I wanted to understand what's the positional picture on the charts. What levels are we getting? Because daily it's a different level on the chart. So, are we getting any constructive levels to understand basis on the positional structure that has formed?
Yes, Sonal, you rightly said it's been a very volatile last few days. Go gap up, gap down. So now let's understand the broad chart. This is the Nifty daily chart. As you can see here, this was the day when market gapped up on back of the trade deal. Until then, Nifty has been forming lower top, lower bottom. Every top is lower than the previous top. So Nifty has been forming lower top, lower bottom. Even Nifty has been as of now Nifty's even though after today's recovery Nifty is placed below its 5-day EMA. 5-day EMA is placed around 24,400. Even yesterday Nifty opened with the gap. That gap resistance comes to around 24,450. So as of now primary trend still remains weak because 5-day EMA is the first basic indicator above which you can say that at least short-term trend has turned bullish. But as of now Nifty is still trading below that. That 5-day EMA comes to around 24,400. So although we recovered sharply, the primary trend remains weak. But yes, if Nifty managed to close above 24,450, then we can say that a short-term trend has turned bullish from bearish. But as of now, uh, short-term trend remain bearish. But yes, considering today's indicator, as we discussed earlier, long build-up and put call rising put call ratio on the back of put trading, this recovery may continue for the today. But overall, yes, primary trend remains bearish for the Nifty as of now.
Okay, and Siddharth, now if we move towards the intraday structure, what do we see on the charts?
Yeah, hi, am I audible?
Yeah.
Yeah. So basically, after opening, market open around from 24,300 on spot level, and after that it has corrected, and it has filled the gap which was created in today's session, and from that level again it has bounced. So currently Nifty is trading around that 24,200 level. Basically, it was trading in between the range of 24,200 to 50 in last 2 hours. So we are expecting that Nifty is currently facing resistance under 24,250 to 260 mark, but we are expecting that this resistance will reach towards the end of the this session. And on the downside, we have a good support around 24,150, technically where 200 EMA line comes. So on the downside, we can expect 24,150, and on the upper side, 24,250. But 24,250 we are expecting to gradually breach, and Nifty may head higher, where the next resistance is around, like Nandi spoken, 24,450, where the actually that gap, yesterday's gap is there. So unless and until that 24,450 is cross, we won't say ki there will be change in the trend. So ultimately Nifty has to close about 24,450 in today's or tomorrow's session. If it is closing above that, then we can expect a trend reversal. Otherwise, we might see a Nifty started correction again and may fall towards 24,000 in coming sessions. So ultimate level to watch is around 24,450.
All right. So we would also like to understand basis on the option chain, are we getting the similar clues for the intraday? I would like to understand what are the important levels on option chain.
Yeah. So let me walk you through the latest derivative data, explain why the structure in the Nifty continues to support positive move from the 24,200 zone level. Right now, the Nifty is trading about 24,215 level, which is places market very close to 24,200 at the money strike prices. The option chain around this level is around heavy activity with clear support forming just below the market. At the money strike is around at 24,200. Position remain extremely active. On the call side, 24,200 call open interest strongly, roughly around 3 lakh contracts. During this session, we have seen a substantial price addition of OI in that particular strike price, indicating that traders are actively positioning this at the money level. The call premium is trading roughly around 55 to 60 range, and implied voter is around between 14 to 15 level. Now we'll go towards the put. In put also, at 24,200 put level, the open interest remains around 2.4 to 2.5 lakh contracts, and there has been strong fresh addition of put open interest around this during this session, indicating aggressive put writing. The behavior clearly suggests that the traders are comfortable depending that 24,200 level as a support. Now, if we slightly look closer, At 24,150 put option, open interest around 2.2 lakh contracts. There has been significant addition in today's session, reinforcing the support zone. And around that 24,100 put option also, open interest close to 2.9 lakh contracts, forming stronger base around that level in the market. This cluster of heavy put trading around 24,100 to 24,200 clearly shows that the institutions are buying with a strong demand zone, and we can expect a support around that level if Nifty corrects towards that 24,100 to 24,200 level. Now we'll move towards the call positioning. On the call side, about the market position gradually shifting higher, like at 24,250 call option, open interest is around 2 lakh contract, which is a fresh addition during this session. And at 24,300 call option, open interest rises around 3 lakh contract, which suggests that the strike could act as a next resistance level. So currently Nifty is around that 24,215. So gradually we are expecting that Nifty will breach that 24,250 level, which is also technical resistance, which is Nifty is not able to cross that in current session. So once it gets 24,250, next resistance is around 24,300 level.
Okay, and do we also see some clues in terms of implied volatility? Because of course the volatility is very high. So what are we getting to know from the numbers?
Yeah, sure. So another important observation in current employability environment is that normally IV tends to remain higher in the range of 8 to 10% during the stable market condition. However, currently at the money IV is elevated around 14 to 15% on both call and put option, which is significantly higher than the normal range. This elevated IV suggests that the market has relatively experienced a higher uncertainty and volatility, which has pushed option premiums higher. However, the fact that IV is stable and not expanding further suggests that the market may gradually normalize while prices continues to move higher. So another strong signal is decline in put premium, which indicates that active put selling, like put premiums at the strike price around 24,200, 24,150, and 24,100 has been seen a sharp erosion in prices, which usually happens when the traders believe that the downside risk is limited. So we have seen the put erosion in those levels also with the prices. So I think we can still expect that 24,150 will be a crucial level on the downside. Yeah.
Okay, so while the positional trend is slightly still bearish, but then intraday it's okay. So intraday we are seeing some clues which are bullish. So Nandish, I would like to understand what are the trading opportunities that we are seeing basis on the current clues that we have shared.
Yes, Sonali. So there are two things as we discussed. Our first of all, primary trend remains weak unless Nifty closes about 24450. Primary trend remains weak. The strategy which we are suggesting right now, it is for today, as we expect some bounce back to continue in the today's session. As Siddharth discussed, we have seen aggressive put writing at 24,100, 200. So 24,150, 200 is likely to take as a support. And also the put call ratio has moved up. So based on that data, we are suggesting a bull spread for today. As primary trend remains weak, we believe that it is risky to buy only on buy play. I mean, it is very risky to only do a buy call because we expect the volatility will continue. So here we are suggest as Nifty has right now started falling. Here we are suggesting a bull spread. Here we are suggesting a bull spread by buying a 24,200 call and selling a 24,250 call. So cost of this pair is roughly 15 rupees. 24,200 calls right now trading around 42 and 24,250 call right now trading around 25. So the cost of the strategy is 15 rupees, and if Nifty goes above 24,250, the maximum gain will be 35 rupees. But here we again likely to reiterate that primary trend remains bearish. For today, one can do this strategy. One can initiate bull spread by buying a 24,200 call and selling a 24,250 call. Risk reward is quite favorable. It is almost 1:3. So that is the strategy we recommend for today.
Okay, and do we also have any trading opportunities to capture the the positional trend that we discussed earlier?
Yes, so To capture the positional trend in the morning, we issued one strategy. That is the Nifty long put butterfly strategy. This is for the next expiry, March 17. Is my report visible?
Yeah, visible.
Yeah. So basically in the morning we issued this Nifty long put butterfly strategy. Here we are recommending a buy 24,200 put one lot around 302, selling 20,700 put two lot at 144 and buying one lot again at 20,200 put at 66. So here the rationale behind this strategy is that, as we discussed earlier, in during last 4-5 days we have seen aggressive short build-up in the Nifty futures. Short-term trend of the Nifty is already weak as it is placed below its 5-day EMA. Also, it is placed below its gap resistance. So short-term trend and primary trend remains weak. In the option segment, yesterday we witnessed a call writing at 24,200, 500 levels. So this band is likely to act as resistance. Considering all these things, and just to add more, the FI is selling. FIs were aggressive seller in both cash and derivatives. So considering all these things, we are recommending this Nifty long put butterfly strategy for the next week. The risk reward is quite favorable. Here the maximum risk is 5,200 rupees per strategy, and the maximum profit is 27,300 if Nifty closes at 20,700 on 17th March expiry. So here we are not advising to hold this strategy till the expiry. If during the during in next few days, if you're getting 4,000-5,000 rupees, it's better to exit the strategy as volatility is very high. But as the primary trend remains weak, today in the morning we have recommended this strategy of long butterfly put. Sonali.
Okay, so for the intraday, we have a bullish strategy, and for positional perspective, we have a bearish strategy to encash upon both of the trends. Siddharth, can you add your concluding remarks for today's session?
Yeah. So combining all the signals, heavy put writing around 24,100 to 24,200 level, call position shifting towards 24,250 and from 24,300 level. Implied volatility is currently at elevated layer around 14 to 15% compared to normal 8 to 10% range, and strong declining put premium indicating selling pressure. All these signals suggest that the participants are positioning for upside continuation rather than expanding a breakdown. So key level to watch is around 24,100 followed by 24,150. It should hold these levels, and upper side 24,250 will act as a final resistance, followed by 24,300, which will be the next key level to watch. So if momentum builds further towards the end, the index may extend towards 24,350 followed by 24,400. Like previously said, unless and until Nifty crosses about 24,450, primary trend will remain bearish. And if it is crossing and sustaining above, then we may expect a trend reversal in Nifty. To summarize all this option chain, clear shows that aggressive put rating between 24,100 to 24,200 level, indicating a strong support formation. Below that, at the same time, implied volatility is elevated around 14 to 15% compared to normal 8 to 10%, reflecting a recent market uncertainty. However, with put writers defending the lower level and call position shifting towards higher strike prices, the derivative data suggests that the positive momentum in Nifty likely to continue as long as index holds about 24,100 to 150 level. Yeah, over to Sonali.
All right, thank you so much. So we got the understanding about the levels which are important for intraday and positional. We got the trading opportunities as well. But during the day as well, the research team keeps suggesting the recommendations for the F&O, especially for the expiry day and for the positional as well. You can find those trading opportunities on your research dashboard in the InvestRight web and InvestRight app as well. So thank you so much, Nandish and Siddharth, for sharing the insights, and thank you, audience, for joining in. See you all next Tuesday at the same time. Till then, all the best for rest of the hours in today's expiry. Thank you so much for joining.
Thank you. Bye.